हेलो फ्रेंड्स, वेलकम टू माय चैनल। दिस इज सीए राखी अग्रवाल। आज का हमारा टॉपिक है जॉइंट अरेंजमेंट, दैट इज इंडियन अकाउंटिंग स्टैंडर्ड 111। दिस स्टैंडर्ड टॉक्स अबाउट व्हाट इज जॉइंट अरेंजमेंट, हाउ टू आइडेंटिफाई अ ट्रांजैक्शन दैट इट इज अ जॉइंट अरेंजमेंट, टाइप्स ऑफ जॉइंट अरेंजमेंट एंड हाउ अकाउंटिंग ट्रीटमेंट इज टू बी डन इन द बुक्स ऑफ द parties, not in the books of the operation. Let's start our topic. Content of these standards. What these standards talks about: scope and objectives, what is joint arrangement, what is joint operation, what is joint venture, then classification of joint arrangements, accounting for joint operator, accounting for joint venturer. So several illustration we also discussed related to questions, ICI RTP questions, some institute study material questions. So all are covered in this video with the concept. Now definition of joint arrangement. Joint arrangement is an arrangement of which two or more parties have joint control, contractual agreement between two or more parties. 3 parties, 4 parties, they make a joint arrangement, means a contractual agreement between them to form a joint operation, and they have a joint control over that operation. Firstly, they have a contractual agreement between them, between the 2 or more parties, to have a joint arrangement. That joint arrangement is controlled by both the parties, because in order to take decision on that joint arrangement, both parties consent is required. So that's the definition of joint arrangement. This concept with the help of example. Suppose ABC Limited and DEF Limited have entered into a contractual arrangement, manufacture a product and sell that in a retail market. As per the terms of the arrangements, contractual arrangements, decision about the relevant activities require the consent of both the parties. Both the parties consent. Rajamandi required hai in order to pass any decision. The parties share the returns of arrangement equally. Whatever the profits comes out, they can share equally. Whether the arrangements can be treated as a joint arrangement? Yes, definitely this arrangement is a joint arrangement, because it fulfills the definition of joint arrangement. In this case, ABC Limited and DEF Limited have entered into a contractual arrangement. The decision about the relevant activities require the consent of both the parties, and the income is to be shared among them equally. So the arrangement is a joint arrangement, that is the unanimous consent of both the parties. So it's a implied joint control, because if one party denies to pass a decision, the decision will not be able to pass. Understanding of concepts related to joint control. What was the concept in order to understand that parties are in joint control? So joint control is a contractually agreed sharing of control of an arrangement. If they share the control of arrangement, they have a joint control over that arrangement. So which exists only when decision about the relevant activities require the unanimous consent of the parties sharing control. In simple words, we can say that it has a collective control and unanimous control. Collective control means I am not able to take decision without you, and unanimous consent means you will not able to take decision without me. So that is the joint control. What is a contractual arrangement? Means two or more parties enter into an agreement, either oral or written. Means there is a contractual agreement between the two parties or more than two parties who are entered into an agreement, whether it was an oral agreement or a written agreement, and they agrees on the terms and conditions of the arrangement, which are documented in a proper form, and that documents also having a right and obligation attached to that. Now we have to explain some of the examples. If in an arrangement there are two parties, whether it's a joint control or not. We know that it's a joint arrangement, but now we are finding whether this transaction is having a joint control or not. So if the two parties A and B having a voting rights, that is 50-50% they are holding, and the majority of voting rights required to take decision is the 51% in order to pass any decision. So if A want to pass decision, he want to take the help of B. Without B, he won't be able to take any decision, because in order to pass any decision, 51% is required. And A is holding 50% and B is holding 50%. A will not be able to pass without B. B will not be able to pass any decision without A. So collective control is present in this case, and unanimous consent means decision taken on the relevant activities is taken by both the parties, because the voting rights required to take decision is the majority vote, that is 51%. So unanimous consent is also present in this case, so it's a implied joint control. Now in the second case, suppose A is holding 50% right and B is holding 50% right, and majority vote is required to pass any decision is 75%. So A cannot pass any decision without B, and B cannot pass any decision without A. So they are collectively controlling the arrangements. Party A and parties B consent is required. So it is an implied joint control. In the third case, what happened? A is holding 60% and B is holding 40%, and majority vote is required to pass any decision. Now in this case, what happened? A can take a decision without B because he is holding 60% right in that arrangement. So A can pass any decision without B. So in this case, collective control is not present. This arrangement is controlled by A because A can individually pass any decision. Now in the fourth case, what happened? 60% is held by A and 40% is held by B, and they required to take decision is 75%. So in that case, what happened? In order to pass any decision, A has to take the help of B. So collective control is present in this case, and unanimous consent is required in order to pass any decision of both the parties. It is an implied joint control. So as we have discussed, in order to pass any decision, collective control is required, unanimous consent is there, then it is a case of implied joint control. Now in this case, what happened? Parties fulfill the definition of joint arrangement. We are analyzing whether the three parties entered into an agreement, they are having a collective control or unanimous control, or they are having a joint control or not. Suppose A is there, B is there and C is there. They are entered into a joint agreement. In first case, what happened? They are holding, A is holding 50% voting right in the arrangements, and B is holding 30% and C is holding 20%. So majority required to pass any decision is 75%. A cannot take decision individually, B cannot take decision individually, and C cannot take decision individually because majority of vote required to pass any decision is 75%. If A and B collectively take decision, then they can able to take decision. B and C collectively want to take decision, they won't be able to take decision because if B and C join hand together, then it becomes 50% only because B is having 30% and C is having 20%. So it becomes 50%, and majority vote required to pass decision is 75%. So they cannot take decision. B and C collectively will not be able to take decision, but if A and B join hand, they will able to take decision because they fulfill the condition which required decision. So 50 plus 30 it becomes 80%. So A and B is having in this case implied joint control because they are collectively they can make a decision. C's consent is not required. So joint control by A and B, which is evaluated under Ind AS 111 because joint control accounting is to be done as per 111. If C is fulfill the condition that C is having a significant influence, then it is evaluated by Ind AS 28 in case of CFS and Ind AS 27 in case of separate financial state. Second case, what happened? A is having 50% voting rights, B is having 25% and C is having 25%. So now how many permutation and combination is possible in this case? Majority required to pass a decision is 75%. 50% if A and B collectively make a decision, then they can able to do. A individually cannot pass any decision, B individually cannot pass any decision, and C individually cannot pass any decision. So if A and B join hand, they can able to pass decision, and A and C join hand, they can able to pass a decision. So unanimous consent of A and B is possible, and unanimous consent of A and C is possible. If B and C join hand, the majority vote which is required to take decision is not fulfilled because it requires 75%. If more than one combination is there, in order to take decision, they have to make a contractual agreement that which combination in the arrangement will able to take decision for joint control. So if the agreement is there that A and B will take the decision on the relevant activities, then A and B is having a joint control. And if in the contractual arrangement it is written that A and C will take the decision on the relevant activities in the arrangement, then A and C is having a joint control. So if agreement is silent, then Ind AS 111 will not apply. In case 3, what happens? A is holding 50%, B is holding 25%, and others means multiple investors are there, they are holding 25%. If A and B want to take decision, the majority vote is required to take a decision is 75%. Unanimous consent of A and B is required in order to pass a decision. A and others want to take decision, they can take. There is a combination of A and B, and there is combination of A and others. So both the combination if there, it should be written in the agreement which combination will be accepted for joint control. They will only able to take decision, not all. If there are numerous combinations, but the combination which is written in the contractual agreement that this combination will able to take decision, only that combination will be able to take decision on the relevant activities. If the agreement is silent, Ind AS 111 will not apply. Now illustration related to implicit joint control. If it is implied, that it is implied joint control because unanimous consent is present in that case and collectively control is also present in that case. So they are implied joint control. In some of the cases like PQR and XYZ Limited establish an arrangement in which each has 50% of the voting rights, and the contractual arrangement between them specifies that at least 51% of the voting rights are required to make decisions about the relevant activities, whether the arrangement can be treated as a joint arrangement. Now in this case what happened? PQR Limited and XYZ Limited, they are having a contractual arrangement, and in order to take any decision on the relevant activity, unanimous consent is required. So in this case unanimous consent is required because PQR individually cannot able to take decision without XYZ Limited, and XYZ individually cannot take decision without PQR, because majority required to pass any decision on the relevant activities is 51%, though they are holding 50-50%. So nobody, both the parties cannot individually take decision. Consent of both the parties are required. So in this case collective control is present, unanimous consent is present, so it is an implied joint control. In this case the parties have implicitly agreed that they have a joint control of the arrangement, because decision about the relevant activities cannot be made without parties agreeing. Both the parties if agree, then only the decision is to be passed, otherwise it is not passed. So it is having an implied joint control. Another illustration is, this is a case of 3 parties. Suppose A Limited is there, B Limited is there, and C Limited is there, who establish an arrangement whereby A Limited has 50% of the voting rights of the arrangement, B Limited is having a 30%, and C Limited is having 20%. This we have discussed in our example in 3 parties concept, that if A is having the 50% rights, B is having 30%, and C is having 20%. Though A is having a majority rights, still he is not able to take decision individually, because in order to pass any decision on the relevant activities, majority vote is required is 75%. So A has to take the help of B in order to pass decision, and if A will take the help of C instead of B, he will not be able to fulfill the condition, because 75% voting right is required to make a decision on the relevant activities in the arrangement. So in that case A and B can form a combination and make a contractual arrangement that they will pass a decision. B and C agrees on the decision, A will not agree, then that decision will not be passed. Even though A has the power to block the decision, it does not control the arrangement, because it needs the agreement of B. Even though A is having a voting rights of 50%, though in order to pass the any decision 75% majority vote is required, so he has to take the help of B in order to pass any decision on the relevant activities. The term of their contractual arrangement require at least 75% of the voting rights to make decision about the relevant activities, implying that A Limited and B Limited have a joint control. In this case it implies that A Limited and B Limited can take decision because they have a joint control over the arrangements, because decision about the relevant activities of the arrangement cannot be made without A Limited and B Limited agree. So both the parties agree, then only decision is to be passed. C's consent is not important in this case. A and B is having a joint control. C is having a significant influence. They has to make an accounting as per Ind AS 27. Now explicit joint control means, this is to be explained with the help of example. Suppose an arrangement having a three parties, X Limited is having 50% of the voting rights in the arrangement, and Y Limited and Z Limited is having 25%. In this case, what happened? Two combination comes out. X can join hand with Y, then it becomes a majority vote, becomes 75% in order to take decision on the relevant activities. And if X can join hand with Z, in that case also 75% is vote is there to take decision. But X can block the decision, then nobody will able to, Y and Z individually not able to take any decision. Because in order to take any decision on the relevant activity, 75% vote is required. So whether the arrangement can be treated as a joint arrangement. In this case, two combination comes out, that is X plus Y and X plus Z. But it is not possible that two combination will take decision. In order to take decision in the relevant activities, it is entered in the arrangement that this combination will able to take decision on the relevant activities. Not both the combination will able to take decision. So in this case, even though X is having a 50% voting right, it has the power to block decision, because without X nobody will able to take decision. It does not control the arrangement because it needs the, in order to pass decision, it needs the help of the agreement of either Y Limited or Z Limited. In this question, X Limited, Y Limited, Z Limited collectively control the arrangements. However, there is more than one combination of the parties that can agree to reach 75% of the voting rights, either X Limited and Y Limited or X Limited and Z Limited. In such situation, what happens? If two combination comes out, which combination will be able to take decision on the relevant activities is to be entered in the contractual arrangement. In agreement, it should be specified that which combination of the parties is required to take unanimous consent in order to take decision about the relevant activities in the arrangement. Now another illustration. An arrangement has A Limited and B Limited, each is having 35% of the voting rights in the arrangement, with the remaining 30% being widely dispensed. Means A Limited is having 35%, B Limited is having 35%, and remaining 30% is with widely dispensed, means with the others party who is having, some of the parties is having 5%, some is having 6%, some is having 10%. In this way, 30% is to be widely dispensed. Decision about the relevant activities require approval by a majority of the voting rights, whether the arrangement can be treated as a joint arrangement. It's an implied joint arrangement because A and B have a joint control of the arrangement only. The contractual arrangement specifies that the decision about the relevant activities of the arrangement require both A and B agree. If A and B agree, they have a joint control, they have a joint control over the rate. Now assessment of joint control based on two parameters. Firstly, depend on the voting rights, and secondly, depend on the composition of the board of directors. Means the joint control assessment is done on two parameters, that is on voting rights. That is, suppose A is having 50%, B is having 20%, C is having 30%. In this case, the voting rights assessment can be done in order to become a joint control. And composition of board of directors. Composition of board of directors means A and B are the two companies. A Limited appoint two board of directors, and B Limited can also appoint two board of directors, and they can appoint equal number of directors. If they have an equal number of directors, they have a joint control. If there is a tie, means they can appoint equal number of directors, then there is an implied joint control. But if in case of tie, then we have to look who has the power to appoint the chairman chairman who give his casting vote, then that company is having a control over the arrangement. Means if A has the power to appoint the chairman and the chairman give a casting vote, then A is having a control. In that case, there is no joint control. But if A and B equally has the power to appoint the board of directors, and A can appoint 2 directors and B can appoint 2 directors, then there is a case of implied joint control. This can be explained with the help of example. Suppose joint control through board representation. Electronic Limited is established by 2 investors, R Limited and S Limited. The investors are holding 60% and 40% of the voting power of the investee company. Electronic Limited is a separate entity which is established by R Limited and S Limited. R Limited is having on the Electronic Limited 60% voting power and S Limited is having 40% of the voting power. Though R Limited is having 60% voting power in the Electronic Limited, still he is not able to take decision individually, because as per the article of association of the Electronic Limited, both the investors has the right to appoint 2 directors each on the board of Electronic Limited. R Limited is having a power to appoint 2 directors and S Limited is also having a power to appoint 2 directors. Now the directors appointed by each investors will act in accordance with the direction of the investors who has appointed such directors. Suppose R Limited has appointed 2 directors, so he can work according to direction of R, and those directors appointed by S can work according to the direction of the S Limited. Further, articles of association provides that the decision about the relevant activities of the entity will be taken by the board of directors through simple majority. It is mentioned in the article of association that if any relevant decision is taken by the entity, it will be taken by the board of directors, not by the investors who is having a majority vote. Decision about the relevant activities requires to be taken by the majority of the board of directors. Hence, out of the 4 directors, at least 3 directors needs to agree to pass any decision. So it is implied joint control, because if R says that my director will not give a consent on your decision, so the unanimous consent is required of both investors, directors. So 3 directors consent is required to pass decisions. So it is the implied joint control. Accordingly, directors appointed by one investor cannot take decision independently without the consent of at least 1 director appointed by the other investors. Hence, Electronic Limited is jointly controlled by both the investors. R Limited holding majority of voting right is not relevant in this case, since the voting right do not give power over the relevant activities of the investor. Now, chairman with casting vote. This concept is explained with the help of example. Suppose MN Software Limited is established by 2 investors, that is M Limited and N Limited. They had formed a separate legal entity, that is MN Software Limited. Both the investors are holding 50% of the voting power each of the investees. So both the investors are holding 50% voting right in MN Software Limited. As per the article of association, in the article of association of the MN Software, both the investors has the right to appoint 2 directors each. M has the power to appoint 2 directors and N Limited has the power to appoint 2 directors each on the board of the company. Now the directors appointed by each investors will act in accordance with the direction of the investors who has appointed such directors. So the decision about the relevant activities of the entity will be taken by the board of directors through simple majorities. Simple majority means out of 4 directors, 3 directors agrees on that decision. Articles of association also provide that M Limited has the right to appoint the chairman of the board, who will have the rights of a casting vote in case of deadlock situation. So determine whether M and Software is jointly controlled by both the investors. No, in this case what happens, both the parties is not having a joint control, though they are sharing equal holding rights, having the power to appoint equal number of directors. But in this case, M Limited has the right to appoint the chairman, who give his consent, who give his casting vote in case of tie. So M Limited is having a control over MN Software Limited. So decision about the relevant activities are required to be taken by majority of the board of directors. Hence, out of 4 directors, at least 3 directors need to agree to pass any decision. Accordingly, the director appointed by one investor cannot take the decision independently independently without the consent of at least one director appointed by the other. However, the chairman of the board of directors has the right for a casting vote in case of deadlock situation in the board. Hence, M Limited has the ability to take decision on the relevant activities through two votes or by the directors and one casting vote by the chairman of the board. Therefore, M Limited independently has the power over MN Software Limited and there is no joint control. Now illustration 8, equal voting right but no joint control. Equal voting right is there but no joint control. ABC Limited is established by two investors, AB Limited and BC Limited. Each investor is holding 50% of the voting power of the investees. As per the article of association of ABC Limited, AB Limited and BC Limited have right to appoint 3 directors and 2 directors respectively on the board of ABC Limited. So ABC Limited is a separate legal entity established by two investors, that is AB Limited and BC Limited. Each is holding 50% of the voting right. As per the article of association of ABC Limited, AB Limited and BC Limited has the power to appoint 3 directors. AB has the power to appoint 3 directors and BC has the power to appoint 2 directors on the board of ABC Limited. The director appointed by each investor will act in accordance with the direction of the investors who has appointed such directors. Further, the article of association provides that the decision about the relevant activities of the entity will be taken by the board through simple majority. Determine whether ABC Limited is jointly controlled by the investors. In this case, what happened? It is very clear that it is not controlled by both the parties. It is controlled by AB Limited because AB Limited has the power to appoint 3 directors. Because in case of majority vote is required out of 5, if 3 directors agrees on the decision, then AB Limited is single-handed control the ABC Limited. So decision about the relevant activities are required to be taken by majority of board of directors. Hence, out of 5 directors, at least 3 directors needs to agree to pass any decision. Accordingly, directors appointed by AB Limited can take the decision independently without the consent of any of the directors appointed by BC Limited. Hence, ABC Limited is not jointly controlled by both the investors. Equal voting right held by both the investors is not relevant in this case since the voting right do not give power over the relevant activities of the investor. Now, joint control over specific assets. X Limited and Y Limited entered into a contractual arrangements to buy a piece of land to construct residential unit on the said land and sell to the customers. As per the arrangement, the land will be further divided into 3 equal parts. Out of the 3 parts, both the parties will be responsible to construct residential unit on one part each by taking decision about the relevant activities independently, and they will entitle for the returns generated from their own parts of the land. The third part of the land will be jointly managed by both the parties, requiring unanimous consent of both the parties for all the decision making. Determine whether the arrangement is a joint arrangement or not. So in this case, what happened? X and Y Limited entered into a contractual arrangements to buy a piece of land. In that piece of land, they want to construct a residential unit and that unit they want to sell to the customer. As per the arrangement, the land is divided into 3 parts. The first part is taken by X Limited and decision on that is taken by X Limited only. Second part of land is taken by Y Limited. Third part of land will be jointly managed by both the parties. Means X Limited is also managing that land and Y Limited, and unanimous consent is required in that third part of the land to take decision on the relevant activities on that land. Out of the 3 parts, the 2 parts of land which are required to be managed by both the parties independently on their own would not fall within the definition of joint arrangement because first piece of land is managed by X Limited, second piece of land managed by Y Limited independently, or not fall within the definition of joint arrangement. However, on the third part of land which is required to be managed by both the parties and unanimous decision making, unanimous consent is required in order to take the relevant decision on that part of land, so they meet the definition of joint arrangement and joint control. Now, multiple relevant activities directed by different investors. Entity R and Entity S establish a new entity RS Limited to construct a national highway and operates the same for a period of 30 years as per the contract given by the government authorities. As per the article of association of the RS Limited, construction of the highway highway will be done by the entity R, and all the decisions related to construction will be taken by entity R independently. After the construction is over, entity S will operate the highway for the period of 30 years, and all the decisions related to operating of the highway will be taken by entity S independently. However, the decision related to funding and capital structure of RS Limited will be taken by both the parties with unanimous consent. Determine whether the RS Limited is a joint arrangement between entity R or entity S. R and S Limited form a new entity, separate legal entity, that is RS Limited, to construct a national highway and operate the same for a period of 30 years. In the contract, what they had mentioned, that construction is done by the R Limited independently, and all the decisions of construction of the highway will be done by R Limited. S Limited will operate that highway for a period of 30 years, and all the relevant decisions relating to the operating activities of the highway is taken by S Limited independently. The decision related to funding and capital structure of the RS Limited will be taken by both the parties with their unanimous consent. Means both the parties' consent is required in the activities related to funding and capital structure. All the activities are significant for RS Limited, but since the funding and capital structure are essential, without which construction and operation cannot be commenced, the same is highly significant, so it is a joint control. Now another example is informal agreements for sharing of control. An entity has 4 investors: A Limited, B Limited, C Limited and D Limited, holding 10%, 20%, 30% and 40% voting power respectively. The article of association required decision about the relevant activities to be taken by majority voting right. Now, however, the investor A and B and C having informally agreed to vote together, the informal agreement has been effective in the recent meeting of the investors to take decisions about the relevant activity. So in this case, 3 investors have informally agreed to make unanimous decision. These 3 investors together also have a majority voting rights in the entity. Hence, investor A, B and C have joint control over the entity. The agreement between investor A, investor B and C need not formally documented as long as there is evidence of existence in the recent meeting of the investors. Now, party with protective rights. Suppose in order to establish an entity, D Limited, E Limited and F Limited establish one separate legal entity, that is DEF Limited. As per the contractual arrangement, unanimous consent of all the 3 parties is required only with respect to the activities related to some of the activities which they had mentioned in the arrangement. In order to take other decisions other than this which are mentioned in the contractual agreement, decision of F is not required. So in order to take decision, unanimous consent of all the 3 parties is required only with respect to the decision related to change of name of the entity. If they want to change the name of the entity, then 3 parties consent is required. If they want to amend the constitutional documents of the entity to enter into new business, then unanimous consent is required. If they want to change the registered office of the entity, then consent of the 3 parties is required. Decision about other relevant activities, only the consent of D and E is required. So whether F Limited is a party with joint control of arrangement? No, because consent of F is required only with respect to the fundamental change in the DEF Limited, which is mentioned in the contractual arrangement. So hence there are a protective right of F Limited. F Limited has a protective right, means they have some rights, not full rights. And D and E Limited has full right in all the decisions taken by the entity. So decision about the relevant activities are taken by D Limited and E Limited. F Limited is not a party with joint control of the arrangement. D Limited and E Limited has the power to take decision in all the relevant activities of the entity. Hence, D Limited and E Limited is having a joint control and F Limited is having a protective right. Resolution of disputes without unanimous consent. Entity A, TB, establish a contractual arrangements whereby decision related to relevant activities are required to be taken by unanimous consent of both the parties. However, in case of any dispute with any vendors or customers of the arrangements, entity A has the right to take necessary decisions for the resolution of the dispute, including decision of going for the arbitration or filing a suit in the court of law, whether the arrangement is a joint arrangement. In this case, what happens? The arrangement is a joint arrangement since the contractual arrangement requires decision about the relevant activities to be taken by unanimous consent of both the parties. Right available with the entity A to take decision for the resolution of the dispute will not prevent the arrangement for being a joint. Because it is a contractual arrangement, unanimous consent is required for both the parties. So special rights is given to A. It doesn't matter that it is not a joint control. It is a joint control through a contractual arrangement and unanimous consent is required. It fulfills the definition of joint arrangement. Thanking you for watching my video. If you like, please share, subscribe me.